Hello traders, so welcome to the Nexoel Trading Hub YouTube channel once again. So we're going to be looking at counter trend trading using the smart money concept. So it's going to be a top-down analysis, but then we'll be looking at counter trading the main directional bias. So this is actually GBP USD and this is the weekly time frame. You can see what we can identify first is that we actually have the breakout structure here to the upside. One thing you must understand is you must actually establish the direction of the markets. You must look at where the market is actually heading to, and then you actually establish on a lower time frame the directional bias you want to actually trade. So what we can see from the higher time frame, which is actually the weekly time frame, we're going to go through a top-down analysis. So in the weekly time frame, you're actually seeing bullish momentum because the market has actually broke this swing high points. So we're expecting to see a pullback. So when we see that the market breaks an external range liquidity, breaks an external swing point, we're expecting to actually see a pullback into inefficiency or into the premium price level or discount price level, depending on the market condition. So this is actually a bullish market condition. So we are expecting pullback into this inefficiency or the discount price level. But what we can see here, we actually have this rejection block. So you can see we have this internal market structure, prices broken through this high and also through the external high. So I'm expecting to actually see a pullback into this rejection block. So let's actually identify the rejection block. So this is the rejection block. So I'm actually looking forward to see that price will pull back into the rejection block, which in confluence in the weekly time frame, you can see we're having a fair value gap. Price may not have to necessarily dip lower into the zone because what we can see is this is actually the institutional order flow. This is the bearish move before the bullish move that took out the external range liquidity. So I'm expecting to see a pullback into this rejection block that was violated to the upside, because you can also see in confluence we have the fair value gap. So we're going to drop down to the daily time frame to also identify the zone where we are expecting to see price will drop to the downside before we actually see the bullish move. So we are not actually going to take the bullish move. We are more interested in actually the bearish move because this is actually a counter trend trade entry models we are actually going to be looking at. So guys, let's actually go to the daily time frame. So guys, this is actually now the daily time frame. So you can see the breakout structure we actually identify in the weekly time frame. And now what you can see is that we are having price actually pushing to the downside because you can see this is the bullish order block that price created. You can see price violated the bullish order block and traded to the downside. So you can see this bullish order block is now a breakout block. So let's actually identify the breakout block. So you can see this is now a breakout block and you can see how price return actually retest the breakout block. So trying to show us we're expecting more bearish momentum to the downside because you can see this is actually the zone we identified from the weekly time frame where we are expecting to see price would actually dip lower to actually react at before we have the bullish move to the upside. So I told us we are more interested in the counter trend. So we're actually going to now drop to lower time frame and we're going to use the 5 minutes for our entry model so that we can actually frame our bearish bias to the downside. So what you can actually see in the daily time frame is actually this particular order block that was violated to the upside. So you can see it's in confluence to the rejection block candle we actually identify in the weekly time frame. So we're expecting to see that price could fall to this candle level before we have any form of a bullish move to the upside. So we actually identify our zones from the weekly time frame and also from the daily time frame. So ours now is to utilize the lower time frame to actually trade to the downside into this price levels because you can see this is the external swing high points. Price broke the external swing high points. We have this internal swing high points which created the institutional order flow in the weekly time frame. So we're expecting this to actually retest price. So we can actually consider this as a mitigation block because this actually sponsored the bearish move to the downside but did not take out the swing low points. And then we had the push of price to the upside that broke through this order block. So now we are going to actually check price action in the 4-hour time frame. Then we also check out the 1 hour and then we drop down to the 15-minute and then basically our entry is going to be established for 5 minutes time frame. So guys, let's go to the 4-hour time frame. So this is actually the 4-hour time frame and what we can actually see in the 4-hour time frame, this is the breakout block zone we actually identified from the daily time frame because you can see this sponsored the bullish move that took out this swing high points, but then you can see price drop to the downside and then took out the swing low points. So now you can see the return of price. Price retested the breakout block zone. So we're expecting to see further rejection to the downside into the zone we identified from the higher time frame. So now what we can see within this zone is actually this institutional order flow. We can see this is the last sell move before the bullish move to the upside. And we can see we actually have inefficiency here. We have fair value gaps. So now we're actually going to now identify our institutional order flow. So you can see this is actually our institutional order flow. So if price is actually going to dip lower into this zone we identified from the daily time frame and also from the weekly time frame. So we're expecting to see the reaction of price at this institutional order flow, because this is actually the unmitigated institutional order flow. And you can see we have more confidence. This is actually the fair value gap. And what we can also see is that we are having this sell side liquidity resting below here. So we have the sell side liquidity, expecting to see that price will actually come read the sell side liquidity in the 4-hour time frame. So you can see we are establishing confidences in higher time frames before we are actually going to drop to our entry time frames to actually look at how to take this entry against the main directional bias, which is actually bullish. So what we can see is that we have the market structure shift from this particular swing low point. So we have the market structure shift, and you can see how price returned. Price took out the buy side liquidities, and now we're seeing the momentum of price to the downside. So what we can see price left here is actually the fair value gap. So you can see, I'm actually showing us guys the important things you actually need to actually be identifying when you're actually analyzing your charts. So you can see we have the fair value gap here in the 4-hour time frame. So my expectation is to see that price is actually going to return into this fair value gap. And then we have the continuation of price to the downside into this institutional order flow in confluence to the order block zone we actually identify as the mitigation block. And you can see the rejection block price level we identify from the weekly time frame. So I'm expecting to see price pull back, sweep this candle high, and then we have the fall of price to the downside. This is actually part of our weekly Forex focus video. This particular asset class, this particular price movement we're actually identifying right now and actually making plans to counter trade it in this particular lesson. The weekly Forex focus video actually captured this particular forecast or analysis we're actually looking at. So this is more of like a review on that price delivery. So we are expecting now to see the return of price to the fair value gap, and then we have the continuation to the downside, because we can see we have our market structure shift here. So let me actually map that out. So we have our market structure shift here. Well, now we are still expecting more downward price action to the downside. So we have the bearish market structure shift, price return took out all buy side liquidity, and now we're having price falling to the downside. So let's check the 1-hour time frame. So this is the 1-hour time frame, and you can see the fair value gap we actually identified from the 4-hour time frame. You can see also in the 1-hour time frame we're having this fair value gap also here. Now you can see the bearish market structure shift we identify. You can see how price returned to the downside, took out the swing low, price return, and then took out all buy side liquidity, and then we have the push of price to the downside. So we can see we have this sell side liquidity. We're looking forward to see price clear, and we also have this sell side liquidity. And then we're expecting push into this unmitigated institutional order flow zone. So now, since we've established our zones from the weekly time frame to the daily, the 4-hour, and now we're seeing clearly from the 1-hour time frame. So we can actually just go to the 5-minute time frame to frame our entries, and then we would see how price gives us the structure to the downside into this zone. So let's actually go to the 5-minute time frame. So this is the 5-minute time frame. And you can see this is actually a fair value gap zone. So what we're going to see is that price is actually ranging here. So basically what we're to identify in the 5-minute time frame within the fair value gap zone, where we're expecting to see price actually return to react at, is actually to identify the sponsorship candle within the fair value gap zone. Because you can see in the 5-minute time frame, what we are having is actually this institutional order flow that actually sponsored the bearish move to the downside that took out this low points. So you can see we are actually in a bearish market condition in the 5-minute time frame. Price took out this low, took out this low, price took out this low, took out this low. So we are actually in a bearish market condition. And then in the 5-minute time frame, we can see within the 4-hour fair value gap, which is also in confluence to the 1-hour fair value gap, we have this order flow movement. Now we can see we have the order block here. And now we can see how price returned to the order block, mitigated the order block. Now we can see we have this unmitigated week. So our possibility is to see that price may return to this unmitigated week, actually mitigate the week before we have the further push of price to the downside. But then this is actually Friday's price action. So we are expecting to see that the market will take out this high point. The market will strip liquidity, and then we have the continuation to the downside when price return into this fair value gap. So let's actually now play price to see. So we can see price is pushing to the upside. Okay. Now we can see that price swept this high point. And what we can also see is that price actually took out this other high point, and then we are seeing this displacement to the downside. So let's actually identify the unmitigated weak I actually spoke about. So basically, we're looking at this as the zone to actually take our entry from. So this is actually the zone we're looking at. So this is the zone we're expecting to see price return to, and then we have the fall of price to the downside. So now we can see that price has actually taken out this buy side liquidity. So price has actually taken out this buy side liquidity. And we can also see that price is giving us this displacement to the downside. So let's play price to see. Okay, so we can see that price actually took out this low point. Now we can see price return into this unmitigated weak, and now we are having price falling to the downside. So let's actually assume that entry was not taken from this unmitigated weak, which now price has mitigated. So let's assume entry was not actually taken since I didn't actually place an order. So let's actually see how price is going to give us that bearish expectation we're actually looking forward to. So what we can see is that now price is falling to the downside. We have this bullish move of price to the upside, and then we can see price continuation to the downside. What we can see is that price took out this candle high point, and now we are having price falling to the downside. So we could actually take our entries from this particular candle price, because we can see price left this fair value gap, and we could put our stop loss slightly above this high point. And now we're going to be targeting for this particular one, we'll be targeting this sell side liquidity. Expect to see that price is actually going to clear this sell side liquidity. So let's play price to actually see how price further drop to the downside. Okay, so you can see that price activated our entry. We can see that the market actually activated our entry. So we are actually in the bearish move of price to the downside. So let's keep playing price to see. The market is still falling. Awesome. So we can see the market is still falling. Now, what you can see is that the market took out the sell side liquidity. So we can actually identify this as a break in market structure. So we actually have the break in market structure to the downside. So we're expecting to see price gives us a return to the upside before we continue in the bearish market condition. So you can see how price returned into our fair value gap, into the unmitigated weak. Price took out Friday's high points that price created here, this buy side liquidity. You can see the Asian session also open. Price took out the high points, price took out this liquidity, price fell to the downside. And then we actually identify our entry from this other block. When we saw the bearish candle gave us the displacement to the downside. So now we are actually going to expect to see a pullback of price to the upside. And what we can see is that we have this fair value gap. And before playing price, what we're going to identify is that you can see that the market took out this buy side liquidity before we actually had the further bearish move to the downside. So price took out this liquidity and then fell to the downside. So we're going to actually look at price return into this fair value gap. And then we're going to also frame another entry from this particular fair value gap to actually further push price to the downside. So this is actually a valid zone to look out for. Since we have the sweep of buy side liquidity, we have inefficiency. So we're expecting the return into the inefficiency, and then we have the further fall of price to the downside. So we're going to play price to see. So we're assuming you've taken your entry from the fair value gap, the main threshold, and then your stop loss should be above this candle high point. So let's play price to see. Now we can see how price returned into the fair value gap, and now we have the push of price to the downside. What we're going to identify now is the price took out this swing low here. So now we have the break of this swing low. So we're expecting to see that price will also pull back to the upside before we have the continuation of price to the downside. So now what we're going to identify is to actually see if price is taking out any form of liquidity here. And what we can see is that now we do not have a pullback at this particular leg move that should serve as a buy side liquidity. So we could see the possibility that price may actually return to take out this high before we have the continuation of price to the downside. But before that is established, we could see the possibility of price also respecting this order block that was violated, because we can see price push to the upside, price dropped to give us this bearish candle, and then we have the push of price into the fair value gap. So this could serve as the mitigation block. So we could see price return, because you can see what we have inefficiency. So price may return to feel inefficiency, drop to the downside before we have the push of price again to the upside. So we're going to identify this block that's price actually violated, because this is a demand zone, and now we can see price broke through it. We have inefficiency there. So let's play price to see. Now you can see how price returned to react at the inefficiency. But we must understand also that we do not have the sweep of buy-side liquidity. After this movement of price to the downside, price did not establish a buy-side liquidity. So we could see the possibility of price returning to take out this swing high point if this price movement to the downside doesn't sweep this low point. So let's play price to see. So we can see that price swept this swing low point. So price may not necessarily have to return to this high to sweep this as a buy-side liquidity. Price may return and then sweep this high points as the buy-side liquidity. So this is therefore meaning that we could actually take another entry from the mean threshold of this mitigation block, because the mean threshold is above this swing high points. So price would return, sweep this high points, and then mitigate the mean threshold or this other block. And then we have the continuation of price to the downside. So you may not really understand this concept until you watch the institutional market structure video. So it's also in the YouTube channel, and the link to that will be in the description. So we're expecting to see that price would actually return to then sweep this buy side liquidity. We're actually going to continue bearish in this market condition. So you see price took out buy side liquidity, fell to the downside. We saw the inefficiency. Price return, mitigated the inefficiency, fell. So we expected to see that this return would take out this buy side liquidity before the fall. So we actually, within this pullback, we identified this mitigation block in confluence to this fair value gap. You can see how price returned and fell. So this is now regarded as our draw on liquidity. Price should take out this liquidity, and then we have the fall of price to the downside. So let's play price to see. Okay, let's see. Let's extend this forward. So now we can see price took out the buy side liquidity. So we're expecting to see now that price will fall further now to take out this sell side liquidity. So you can see now we have our high established. This is now our valid low point. So we have the high, we have the low, a new high established. So let's play price to see. Now we can see that we have what's break of the swing low. So we have a break of market structure to the downside. So I'm just showing you guys how you identify entries when you're in a counter trend. So now you can see now we have a break of structure to the downside. So ours now is to also identify the possible entry levels we could see within this expansive leg move to the downside. So basically what we can see, we have this pullback. So this is actually our buy side liquidity. So we're expecting to see how price would return and then take out this buy side liquidity. So meaning we'll be looking at price returning into this order block. We'll be looking at price reaction at this order block, since we've actually identified our buy side liquidity that we're expecting to see price will come to, because we have the fall to the downside, the pullback, the fall to the downside. So let's play price to see what happens. So basically, if you're taking an entry, meaning you're taking your entry from this order block and then your stop loss above the order block. So let's play price to see. Okay. So we can see that price took out the buy side liquidity. So now we can see price reaction at the order block. So if you actually placed your position, meaning the market have actually activated your position. So let's further play price to see what happens. Okay. So now what we can see is that the market actually swept the high points. So meaning if your stop loss was possibly not having enough breathing space, then your stop loss should have been rated by this movement to the upside. So we'll be looking to see how price is actually going to give us the further bearish move, and then price will take out this low. Then we can look at how we could possibly take an entry to the downside. So you can see if your stop loss was just slightly above the high of the order block, then you can see how that would have actually rated your stop loss. So let's actually play price to see. So now what we can see, we have for the push of price to the downside. And now what we can see, we have this displacement, price return falls to the downside. So we do not really have a clear reason to want to take an entry in this particular price delivery because we can see the impulsive move is massive to the downside. So the only thing we could look out for is to see how price is actually going to return to this fair value gap. So if price should return to this fair value gap, then that should be your entry, this fair value gap, and then the stop loss should be above the high of this bullish candle. So let's play price to see. Okay, so we can see how price return into this fair value gap because you can see price mitigated the order block, and what you're going to see is that we have this bearish market structure shift to the downside. We have further push price return into this fair value gap. So let's play price further to see. Price continue the movement to the downside. So your target should be to see that price will clear this sell side liquidity. So once you take this entry, the target is to see that price will clear the sell side liquidity. So let's further play price to see. Okay, so we're actually in a new day. So this is a new day. This is Tuesday. So let's keep playing price to see. Okay, so now you can see that price will took out this sell side liquidity. So we have the breakup structure to the downside. So you can see how price is yet to actually return into a higher time frame zone. So we can actually still frame more bearish entries to actually push price into a zone that we're actually looking forward to. So let's actually play price further to see how price is reacting in the new day. Because what we can identify, we have this buy side liquidity. So we have the buy side liquidity resting above. So if you're going to have further push of price to the downside, so we're expecting to see how price would return and clear this buy side liquidity, and then we have further push to the downside. So meaning our expectation is to possibly have an entry at this order block. We'll be looking at this order block to see if we're actually going to have an entry from the order block. Since we have the buy side liquidity and price is yet to return into our higher time frame zone. So let's play price to actually see how price returns to the upside, react at our order block and fall. So you could actually set your pending order at this order block, looking forward to see how price falls to the downside. So let's play price to see. So price is returning to the upside. So price is taking out our buy side liquidity. So let's still play price to see. Whoa. So you can see that if you actually set a pending order here, you can see how the market would have returned to your zone, activate you, push down what it needs to, but then we can see that the market push further to the upside. Price returning to the swing high points. So let's actually identify the order block. So we can see we have the order block at this swing high points. So now we can see the return of price to the upside into the order block. So let's actually play price to see. We're still expecting to see more bearish move to the downside since price have not really returned to the higher time frame zone. So let's play price to see. Wow. So price also took out this high point. So let's play price to see if we're still going to have the fall of price to take a bearish move to the downside. Now, what we can see is that the market took out this low points. So basically we have a bearish market structure shift. This is our breaker. Price took out the high. We have the breaker. And then we have price took out the low. So we have our market structure shift to the downside. So we're looking at the return of price to the breaker. This is actually a flip zone because you can see we have the breaker. The breaker created this order block. So let's actually work with the order block that price created here, because in confluence to the order block, you can also see that we have this fair value gap and also this fair value gap. We have the buy side liquidity. So let's play price to see. So meaning we're taking entry from this zone and then looking forward to push price to take out this sell side liquidity into our zone. So let's play price to see. So let's actually place an entry here. Let's place our entry here. And then we could put our stop loss above this high point and then target the swing low points into the zone. So this is actually what we're looking forward to. So let's play price to see. All right, price, okay. So we can see price return activated our entry. So let's see if price will continue the downward movement to the downside. Okay. Now, what we can see is that price also gave us another bearish market structure shift to the downside. We could actually take an entry at the close of this candle into our zone we're looking forward to the downside. Okay, so price is falling. Okay. We can see how price fell to the downside, even though price did not hit our take profits. So that was actually extremely more lower. I actually targeted the zone. So we could just target the low to see that price will sweep the low. So now we can see that this was activated and then price for the push to the downside. So price have not yet fully returned into our zone. So we could still expect to see for the push of price to the downside into the zone. So should in case price mitigates the high of our zone, let's actually push into the upside. So what we can see, we have this buy side liquidity here. What we can see now, price took out this low point. And in confidence to this low point, you can see we have this fair value gap. And we also have this institutional order flow here. We can see that we identify this price return to mitigate this price fall to the downside. Now we have this institutional order flow to the upside. So since this is where price returned to retest and then price fell, so we could actually expect the possibility of taking another entry at this high point. So this is actually our order block that we could possibly anticipate to take an entry from, since we're seeing that price is actually possibly pushing to the upside. So let's play price to see. Okay. So price took out the buy side liquidity. So let's further play price to see. Okay, price is ranging. The market is ranging. Market have not returned to order block. Okay. So we can see that price returned to the order block. So we can see how price returned to the order block, mitigated the order block. So if, and now we can see that raided the stop loss. So meaning if your entry was here and then your stop loss was actually above the high, then you can see how price returned and then took out the stop loss. But then let's still play price to see if price is actually going to return to the downside, because we have our zone not yet fully mitigated. Okay, so we can see that price fell to the downside and now price took out this low point. So what we can see here, we have bearish market structure shift, giving us a signal the price is actually going to further push to the downside into our zone. We can see the sell side liquidity, sell side liquidity, sell side liquidity. So we can see how price fell, pull back, price fell, return, mitigated. So we can see we have this inefficiency here. So we could see price return to this institutional order flow. We want to see the return of price to the institutional order flow. So we could take an entry here. Let's actually take an entry here. So we could take our entry here. We could just, since this is the last bearish candle before the bullish move, let's take our entry at the low and the stop loss above this order block, and then targets the low points into our zone. So let's play price to see. Okay, so we can see price return triggered our entry. So let's further play price to see. Okay, price further return into our entry. Now you can see price fell, pull back, fell to the downside, created buy side liquidity. What happened? The market returned to take out buy side liquidity. So let's further play price. So meaning we have the low, price created the high. So we're expecting a new low. Wow, massive. So we can see this displacement to the downside, this massive displacement to the downside. So price is still yet to fall more into our zone. So let's play price to see. So now you can see price fell to the higher time frame zone we actually identify. So this is how you want to be taking what? Counter trend trades. So you can see how I think we actually had 2 or 3 missing trades and more winning trades. So cheers guys, God bless you till I see you guys in the next video.